Let's take a look at first half of this Quizizz for Chapter 3. This is management information. A lot of accounting here. Question 1. A fiscal accounting period is one which does what? Okay, so fiscal accounting period means that it does not begin on January 1st and end on December 31st, but it could be any other time period, as long as it's a year. So ends on any date other than December 31st. And the reason there's fiscal periods is because at the end of a year, at the end of a fiscal period, there's a lot of accounting work that needs to get done. And for some businesses, certain times of the year are better than others, depending on how busy they are. 2. Selling grain from storage would be which type of farm business activity? All right, so this gets into, I see we have a misspelled word there. That should be investment activity. But this gets into things like cash flow statements, because there's different types of activities that occur in a business that involve cash. And so this is a category of each of those. So you've got investment activities, financing activities, and then there's operating activities. And these are like day-to-day business of a farm, growing crops. So the answer is operating, selling grain. Typical business operation that you would think of on a farm. When using cash accounting, which of the following accounts would never be used? Well, accounts payable, because accounts payable means you owe somebody money. And so in a cash accounting system, you only record transactions when they actually occur, whereas in the accrual accounting system, you record them when they become your responsibility to take some action. So in cash, generally you don't have payables. You just pay them and record them when they're due. Prepaid expense. Prepaid expense is an interesting category. It's an asset is what it is. So it's an expense, but it's a prepaid expense. So rather than classifying it as an expense, when it's prepaid, it's considered an asset because you're paying for something that's going to be used in the future. This is very typical for things like insurance. Let's see what we have here. So the answer is in an accounting period prior to the one in which the item will be used to produce income. So when you buy auto insurance, for example, you have to pay today for 6 months of coverage. And then it becomes an expense as each month goes by and you consume or use up that insurance coverage. So that's a prepaid expense. 5. Which of the following would not be recorded when using a single entry cash accounting system? So this would mean, single entry means that they're not concerned about debits and credits. So let's see what it says. Would not be recorded when using a single entry cash accounting system. Charging $2,000 worth of chemicals at the farm supply store. Oh, single entry cash. Okay, so it's cash accounting. So if you're charging it, you're not going to record it till you pay for it. Recognizing that $3,476 of interest has accrual, cash. Okay, so you wouldn't use this. You don't record accrued expenses or income. Billing a neighbor. Okay, so this is accounts receivable. Once again, you're not going to record this as a transaction until you actually receive the cash. So they would not be recorded. It's really best to use an accrual system, by the way. Most families, for your personal accounts, use cash systems. And a lot of farmers, small family farms, I would say for the most part, use a cash accounting system, and the main reason is because it's just easier. Doesn't mean it's better, though. One advantage of a double entry accrual system over a single entry cash system. So once again, double entry means we've got debits and credits, and the accrual accounting system means that we're going to record economic events, transactions, as they become our responsibility, whether or not they've been paid or that we've received payment. So what's an advantage? A current balance sheet is always available. That's true. It is, because you're recording all these things as they occur. That's why it's better. 7. An organization that develops and publishes guidelines for farm financial analysis and reporting is called the, All right, we just need to memorize this. The Farm Financial Standards Council, FFSC, the FFSC. Number 8. At the end of the year, if farmer has an unpaid bill at the local machinery repair shop, it would be shown in an accrual accounting system as account payable. Yep. Owing money. Number 8, a major advantage of accrual accounting over cash accounting is not simplicity. We've already talked about that. It's a more accurate estimate of annual profit. The idea is that with accounting, as best as possible, you're trying to mirror reality. You're trying to match all of your expenses with the revenue that was generated by those expenses. Try to match them up so you get the best picture of what's actually happening. And the reason why that's important is because you need to compare from one fiscal period to the next, and you need to do things the same way so that when you're making that comparison, it's accurate, it's possible. And the main reason for doing all of that is decision making. You've got to be able to make good quality decisions to move forward. The Farm Financial Standards Council, there it is, FFSC, recommends uniform procedures. That's what we just talked about for preparing farm financial statements. And why do you want a uniform? So you can compare from 1 month to the next month, from 1 year to the next year. And this becomes important if you want to get a loan, some financing. Banks want to know what's been going on for the last 5, 10 years on your farm or in any business. Number 11, using double entry accounting, transactions can be posted to which accounts? So double entry, once again, debits and credits, income, expense, asset, and or liabilities. Yeah, so just think of like that balance sheet along with those other accounts like expenses, withdrawals. 12. When something is purchased and paid for in a year before it will be used to produce income, it is called, well, there it is, prepaid expense. Covered that. An organized list of all accounts used by the accounting system. We've talked about this in previous lessons. This is the chart of accounts. It's generally the first thing you put together when you're starting an accounting system is which accounts will you use to record transactions, economic events. What are you going to keep track of to help you with your decision making? 14. According to the cash accounting method, expenses are recorded when they are paid. We've talked about that. 15. The chart of accounts in a farm accounting system consists of a list of income, expense, asset, and liability categories. That is true. It'll have owner's equity in there too. Well, let's just go ahead and finish all of these. Only 31 to get through. Which type of accounting system would be most useful to a farmer who wanted to know which of the 6 crops she produced was most profitable? Enterprise accounting. I need to look into that. I haven't heard that term before. We'll check that out. 17. An accounting period must be from January 1st to December 31st. That's not true. You can have any kind of a fiscal period as long as it is consistent from year to year. You know, with that fiscal period, that'd be like, somebody who's involved in manufacturing, say, equipment for winter, like snowmobiles. They probably have a fiscal period that's somewhere more like July 1st to June 30th, because in the summertime, they're not going to be very busy producing and shipping snowmobiles. Whereas December 31st, end of the year for them, would be very busy time to manufacture, distribute, sell snowmobiles. 18. Good farm records can be useful when applying for a farm loan. Very true. An accounting system only needs to be able to record those transactions which are part of the farm's production activities. That's false. You got to record all types of activities that involve sources and uses of cash. Depreciation is a non-cash expense which is included as an expense when using cash accounting. True. Revenue and expenses can be properly matched in the correct time period when using cash accounting. We just talked about that. You have to use the accrual system to accurately match expenses and revenue. 22. A single entry accounting system does not maintain current values for assets and liabilities. That's not true. We still got to keep track of that stuff. A depreciation schedule is necessary part of a complete accounting system. True. Got to keep track of our accumulated depreciation, all of that. Records are of no use when trying to obtain a new loan. Okay, very false. 25. The basic accounting equation is assets plus liabilities equals owner's equity. That's false. It's assets equals liabilities plus owner's equity. 26. Changes in inventory values are not included in a cash accounting system. True. Cash accounting will always show a lower profit than accrual accounting. Always. No. False. 28. Profit or net farm income is equal to total revenue for the accounting period minus total expenses for the same period. True. 29. Farmers and ranchers must use a calendar year accounting period. That's false. They can use a fiscal period as long as they use the same one. If you ever do change it, I think you have to get permission from the IRS to do that. At least with an accounting system you do. You got to maintain consistency from year to year or have a really good reason to change it. 30. Most farmers and ranchers use the cash method of accounting. True. And the last one, the accrual method of accounting is easier to use than the cash method. No, it's not easier, but it's more accurate. So that concludes management information for Chapter 3 for farm management.